Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone's doing well. This has been a different week in the lack of FOMC speakers. We're in that blackout period. It's been a different week in terms of data. We've really only had the ISM and Bank of Canada in terms of impactful releases, and we definitely saw a lot of volatility from Apple last week in the wake of WWDC. I think a lot of traders instantly were reminded that we live in a high concentration weighted world where a small number of stocks, a small number of sectors really do dictate what the broader averages are going to do, right? And that's what high concentration weighting does. It tells us that, sure, there might be 500 stocks in the S&P 500, but frankly, no more than 20, and frankly, a lot closer to 10 only matter because of their outsized weighting. And so that's really a lot of what we've been seeing this week. I think that overall, as we go into the FOMC, and it's not what I think, and I actually like to take that phrase out of my vocabulary. It's not what I think, it's what I see, right? We don't trade the markets we want necessarily. We trade the markets we have, right? And we trade what we see, not what we think. And what we see is that there is a nearly 80%, it's hovering in the low to mid 70s fairly consistently, chance of a pause at the meeting on the 14th. And when we move out to July 26, that's where overall, if we're going to see that quarter point hike before we go to a pause, and a pause precedes a pivot, unless this is 2018 and Powell goes, whoopsie, and we go right from hiking to cutting pretty much. But for the most part, pauses in a normal cycle will precede the pivot. And it looks like July might be where that quarter point hike is still waiting in the wings. Then we go into a pause through September, maybe even November, till we pivot later on this year, right? That's where, remember, markets are always forward-looking machines. They're trying to look around the corner, right? They're always trying to look around what we can't possibly know, but based on what we can see, we can forecast and place trades based on that. No market does that probably more than bonds, right? I would say no market probably tries to look around one or two corners more than the bond market. We've rolled to the September contract, and we still see a lot of back and forth. We're not seeing brand new highs in yields because we haven't broken the 125 handle, right, on this ZB long bond futures contract. And yet we're really not seeing a push to higher highs and higher lows. And that means we're not seeing lower yields either. Bonds really don't know when we're going to pivot. And the September contract is saying, yeah, I'm not so sure. If you want to do an interesting contrast, pull up the ZBU. So for those of you that are not familiar with futures, gang, if you're already an options trader, believe me, futures are not that big a deal, because just like you pick an expiration, you just got to pick a contract. You got to know where most of the open interest and volume are. Anyway, you take a look at ZBU and look at where it's trading. And then this is where eventually, if we take a look at the ZBZ, now it's the U September contract versus the Z December contract. You move out there, and that's where we're looking. And I know there's nothing going on here, but as we get further and further into the year, that's where I want to see what the rollover gap is going to be between these two. Because if there is a bond contract that's going to work in the expectation of the pivot more, it's going to be the end of the year. So I'll be keeping an eye on that. I know a lot of you will be as well. In the meanwhile, we trade today, right? We trade today. And today, there we are at 4,300. If you recall some of the videos that I posted, and by the way, this week, as I have now for 2 or 3 weeks, I'm going to dive back into my Trades Viz software. A lot of you are probably already familiar with this. I've done this the last 2 Fridays, and I'm going to show you how this week fared. And here I'll take a little bit of the mystery away. This was far more difficult a week than the week before and the week before. 2 weeks ago, unbelievably powerful, easy. I don't want to say easy, but it was cleaner follow through, easier follow through on setups. Last week was pretty good. This week, go figure, lacking the data, it's not been as smooth a ride. But if we're going to see prolonged strength through 4,300, who has to participate? Again, remember, gang, equal weighted indices, who cares? That's not the world we live in, right? XLF, XLV, those have been the pesky laggards within the S&P. Sure, tech's been doing all right, and it's been leading the charge, and it's in a really strong uptrend, as is the NASDAQ, right? However, until financials and healthcare decide to join the party, it's going to be really tough for the S&P to continue through 4,300 and make that level support. It's one thing to poke through it. It's a whole other thing for that to become a floor. All right, so let's go ahead and get to the questions. As always, best part of our show. Thank you for being a part of our caffeinate and dominate crew. All right, let's get to it. First up, JB asks, what causes ZB to jump at 3:30 today? 3:30. Oh, JB, you mean, is that Eastern? I have no idea. Look at that. I have no idea what was happening at 3:30. I was sleeping. Let's go ahead and take a look at the economic calendar. Let's see here. All right. So if I take a look at the economic calendar, you're talking about East Coast time. All right. Employment change. I don't know if Canadian employment would have affected the ZB at that time, but let's go take a look at what happened at 8:30 Eastern this morning. All right. All right. So here we have, it jumped about 10 minutes before that. I don't really know. JB, here's what I do know, and I think I don't know is a really fair question. JB, I don't know. Does it seem to have coordinated some? I'd say the move back down. 8:30, look what happened. 8:30, the move back down might be Canadian unemployment. I know the BOC, and I love that you're looking at Canadian data, by the way, because we know the Bank of Canada can contribute to some of the volatility in the US. I don't know what the reason was, but here's what I do know. Everyone take a look. Here's my 5-minute chart of the bond futures. And at 8 something in the morning, this is really a futures conversation, we just nailed the hourly price movement range. So those green and red zones are historical price movement ranges that are calculated on the specific hour of the day with 6-month look back. So it's a rhythm. It's a pattern, if you will, that occurs based on the time of day. We nailed that. So there's your first cue right there, a minor low. There's your cue for the acceleration. I always wanted to call an indicator the trend DeLorean, so that's just what I called it. So you've got a pattern, you've got a momentum acceleration, all out of the green zone. That's a setup to the long side, but the why of it, JB, sometimes the why of it will elude us, but thank you for the question. All right, so let's see here. Next up is, let's see. Seamus asks, question on risk. Oh, great. I love risk questions. Fantastic. And I love we're already seeing folks looking at the global calendar. Thank you, JB. Seamus asks, took cues on the NQ daily price movement range, okay, on Wednesday. All right. What time frame, Seamus? Well, I'll just go to the daily. Okay. So you took the cues on Wednesday. I'm going to presume daily. So on the, let's see, DPMR. So that was what? The 7th. Yes. So you bought that. Oh, wow. Nice. Okay. So for those of you wondering, Rag, what does that mean? DPMR, daily price movement range. I have an hourly price movement range, which are the green and red zones that identify hour to hour volatility patterns. Here I have day to day volatility patterns. This is something unique to Simpler, gang. So if you've never seen it, it makes sense that no one else has this because, well, I created them. And what it does is it looks back 6 months and it says, hey, there is a price movement range unique to each day of week. How about we calculate that and post it on a chart because that's a very high probability. 68% of the range is going to be represented by those gold and gray zones. So here, Seamus bought that. Oh gosh, that's really nice. You're halfway through. Yeah, I see what you mean now, Seamus. So you're 50% through. You've hit that pingala. Yes, that 50%. Love it. Tighten up the stop. Heck, it's Friday. If you want to pay yourself a little bit, and then I would look to the gold around 355.95, step out in front of 356. Yeah, so what I would say is go ahead and pay yourself. Scale out a half, scale out of a third, at least move to break even, to your point. So well done. Well done. And then if you want to take the remainder over the weekend, the reason I say scale out is at that point, at least you've realized a profit. You've reduced your position size, which is in fact a way to reduce risk. All right. So thank you for the question. All right. Aaron asks in relation to Seamus's question, and nice trade, Seamus. How does DPMR differ than ATR? Pineapples and apples, my friend. So here's the difference. Average true range on average is what? A setting of 7, maybe 14, 21. Does that sound about right? What's the typical setting on an average true range? Okay. So then the next thing is it's looking back 7 candles. It's looking back 14 candles. It's looking back 21 candles. So that means on a 5-minute chart, it's looking back 35 minutes on a, get the idea. It's looking back X number of minutes. Okay. Then that's really skewing to what's happening right now, which is not a bad thing with ATR. Okay, what does PMR do? So average true range versus price movement ranges. The way that I've queued these up, and big shout out to Lorna Bot for making these indicators amazing. What we want to look at then is 6 months. So if you were to compare 35 minutes or even on the longer end, right, 21 5-minute candles, right, 105 minutes to 6 months. Okay, that's not the only difference. So it's a vastly larger amount of look back, amount of historical volatility. Okay, the other part is ATR doesn't know the difference between Monday, Tuesday, Wednesday, Thursday, Friday. Now, if anyone's done any volatility analysis, as I've been doing this on and off for about a decade, over a decade now, you'll know that Monday volatility is different than Tuesday, and Tuesday is different than Wednesday. So not only are we looking back 6 months, we're separating out hour by hour of the day. How many folks here know 8 a.m. is very different than 8 p.m. Eastern? The amount of price movement range, it's vastly different, right? So we separate out not just the day of the week or the hour of the day, depending on which, we're going back 6 months of it. So they're completely different calculations. And for what I need, which is that historical volatility pattern, the PMRs, the DPMRs, and the HPMRs are just vastly superior to answer those questions. And that's the difference. Completely different calculations, right? Starting at the historical, the look back, and then even the way in which the data is crunched. Thank you for the question. It's a common one. I appreciate it. Okay, moving on to, let's see, we talked about that question on risk. Love it. Again, great QQQ trade. Next up is, what do I think about LCID? Well, let's start with the structure, right? It's an oversold neutral environment. It's a sub. Okay, so this is where the price, rainy days, this is where the price is going to drive me to, say, trading view, because I want to use volume profile, point of control, value area high, value area low, VWAP, V-score, different volume ledges. Under 20 bucks, it's really a volume game. And that's where I would say we would go to trading view, look at where the volume is sitting. And I think it's really important to participate where the size is at. Yes. All right. Next up, what are my thoughts on a long SPY entry point? Well, I'm going to usually cue that off, Patrick, off the ES. Remember, SPY is a 9:30 to 4 conversation. ES is nearly a 23-hour-a-day conversation. It's just more complete, right? It's more complete view of what the S&P is doing globally rather than just during the Wall Street trading hours. All right, so if I want to buy ES, it's very likely not going to be, and this is where time frame matters. I'm not a fan of multiple time frame confirmation. I don't give a rip what the hourly is doing to justify something on the 5, right? That's just me. That's just me. The hourly has its job. The daily has its job. The way I look at it is more like gears on a car, right? I can go up and down the gears, but I've got to be in one gear to drive that car, right? I can't be in second gear, and second gear cares what first gear thought. I can't be in between gears. A lot of traders, we're crunching our transmission because one day we're on a 30-minute, the next day we're on a 5-minute, the next day we're on a monthly. What's the logic? It isn't. It's curve fitting. Be careful. I've been down that road. I'm not a fan, but that's just me. That's just me. So if I'm going to trade the S&P today, Patrick, based on where we are and where my zones are, like a good batter at the plate, I know where that pitch has to be. Very likely the market is not going to throw that pitch to me today. Where the pitch might be is likely on the 5-minute time frame. So it'll end up being a day trade for me today, likely at the hourly price movement ranges. I do like a long. Right now, although I don't know what we're going to be as we go through the clearing range, which is where the volume and the volatility really kicks up a notch in about 13 and a half minutes here, 200 propulsion, around 42.93. The least of my hourly price movement range is sitting at about 42.92 and a half. And then the more conservative would be way down about 42.80. So I'm looking at those levels for potential buys. Obviously, the first two are aggressive and absolutely rely on the trend remaining up. I can take a glance down at the bottom of the screen, see that multi-chart lower green row telling me that the trend is up. Beautiful. Traffic light simple. That's going to be my zone for an aggressive entry, aggro as I like to call it, but more conservatively, I can wait for the green zone of the hourly price movement range. And another couple of things we can note. Why would I want to be long? The structure on the 5 is all I really need to use to justify that trade. Notice I'm not using the 60 or even the daily. That is a world unto itself. It's 5-minute slices of psychology. However, it is nice to know, and those of you that have been taking my day trading classes for the last 3-4 years know, what is the previous session close? We call that the line in the sand. It's a pretty common level to look at. And the line in the sand tells us where from yesterday's close we believe we're up or down, right? It's somewhere there has to be sort of a finish line, right? It's the 4 p.m. cash close. So that finish line tells us, oh, we're beyond the finish line, right? We're above it or we're below it. Because we're above it, there's inherently some bullishness. That's where the daily is kind of helpful to look at. But other than that, I'm looking at the structure of the 5. That tells me to buy. I'm with you on that, Patrick. Looks really good. All right. Next up is, can we look at Home Depot on a daily? Sure, editor. You got it. All right. Home Depot. Taking a peek here. We're breaking the 200, which is great. Home Depot's a funny stock, and let me tell you why. Because when you think about weighting, Home Depot is all over the place. ITB, XHB, so your home builders, home construction, the Dow. It's also in consumer discretionary, so it even has a foot in the NASDAQ, so to speak, in terms of weighting influence. Getting above the 200 is a big deal. Now we're edging towards a bullish hemisphere. Be careful though, because there probably still are some near-term shorts that we could probably take advantage of until we find firmer footing above the 200. Today, we're just sort of poking through. Now we need to know we've been able to run stops, right? We broke the ceiling. We broke that supply. Now we need to see if there's buyers. Now we need to see if there's demand around 300. If I'm going to buy this though, I'd like to see a little bit of selling pressure down towards 298 to 295, much like we saw on the 1st of June. See that? Right into the gray zone. Even on the 31st of May, those are two very good looking levels for support. Went right into resistance on the 2nd, and now we just want another setup like that. Let's sink into the gray. Let's take profit at the gold. Does that make sense? So that's what I'm looking at there. Okay, I think we're caught up on the questions. I believe, let's see here. I think we're good. Yeah. All right. And we're out of time. So as always, gang, thank you for being a part of the Caffeinate and Dominate crew. I will see you all Monday morning for the next Charts and Coffee. But remember, Sunday, we'll be getting together 6 p.m. Eastern for our This Week in the markets live. If you want to get a kickstart on the next week, come on, join us 6 p.m., 30-minute show, Q&A. We'll prepare for the next week. We'll take a look at the calendar. We'll take a look at the macro. We'll take a look at some levels and trends, and we'll get a head start on everyone else. You know what? We're in separation season, by the way, right now, gang. So this is summer. Everyone wants to hang out by the pool, drinking a wine spritzer, right? Summer is where if we drop the hammer, we start to study, we start to learn, we start to prepare for fall. When folks kind of saunter back to the market and start paying attention in fall, we've been preparing, we've been training all summer long. So I love summer. Summer is where I feel I get an edge on everyone else, and I know you all too can do that. And Sunday's kind of that way too. Let everyone else kind of wake up to the market on Monday. We've already got a plan on Sunday. I love it. Separation season. All right, gang, be good to each other. I'll talk with you soon.